Good afternoon, everybody. Welcome to Talking Real Estate with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner, the second team leader at Champions Real Estate Team. And joining me today is Russ Williams with Williams Mortgage. So we jump on here every Wednesday. Our times have been kind of a little all over the board here this last couple of weeks, but I guess that's when you have to do a little daddy daycare stuff. You got to take kids to swim lessons over the lunch hour. But anyways, we always like to jump on here and kind of give you a rundown of what's going on over the last week in the real estate market. So we'll jump straight into it, not try to take up too much of your time and get you straight to the details. So our graphic here going into, kind of load that up here for you. Over the last 7 days, we've had 495 new listings go live on the market, 390 new contracts, so those are pending listings, and then 483 new homeowners. So congratulations to them. So we're down a little bit from the previous week. So we saw a big push, right after the Memorial Day holiday, getting a lot of new listings on there. Our new contracts are down a little bit, which we'll kind of touch on probably with the interest rates of what's going on. And the Fed just met about a little over an hour ago and kind of deciding what they're doing with the short-term rates in that regard. So we'll kind of touch on that with Russ here in just a little bit. But so yeah, as we see, there's still a great time to buy a house, sell a house. And we are not seeing as much activity as it comes down to it. I just had a listing go live last Friday. In a 300 price point. And so, 2 months ago, we may have seen, 25, 30, 40 showings on that house. We saw maybe half of that, from a showing perspective. So the market it's stabilizing, I feel, in that regards. It's not getting as crazy. We are still seeing some multiple offers on houses, depending on condition, price point, and everything that goes along with that. I'm talking to other agents in our mastermind meetings. Some agents and buyers are getting home inspections, maybe for informational purposes only, maybe not asking for a lot of repairs or anything to that sort, but that's something we hadn't seen in the marketplace, in a couple months in that regard, if not a year or so. But let's take a look at the 30,000 foot view. Kind of blow this up here for you so you can see. So looking at the Omaha and Lincoln MLS, basically it's 1,724 homes in the marketplace. I did take out no show listings, breaking that closer down into the Douglas and Sarpy County area. We have 921 active listings, so we're just under 1,000. So we haven't hit that 1,000 mark in a while. But existing home sale or existing homes on the market, 456. So that number is creeping up there, which is great. We're having a little more inventory to choose from. New construction jumped up a little bit, so those homes are getting in the ground at 465. Month supply of inventory is about 1.1. Average sold price went up again a little bit by about $1,000, so we're at 310 on the average sold price in the Omaha MLS. So as you can see, the market is picking up and is stabilizing in that regards as we look at it. So like I said, still a great time to get out there and buy. I know some people kind of jumped on the fences a little bit, with the interest rates, going up, and before Russ and I got on, we kind of touched on what's going on in the market. So I guess, Russ, what are you kind of seeing in the marketplace from the lending side and the mortgage side?
Mark, rates are definitely up from what they were the same time last week. And part of that is because we had two big inflationary reports that came out last week. The retail inflation report called the Consumer Price Index came out at 8.6%, which was hotter than expected. And that was primarily because the month of May was about 50% more inflation for the month than they thought that there would be. On Monday of this week, the Producer Price Index, which is the measure of inflation at the wholesale level, came out just about at expectations. And so we got a little bit back of what we lost on Friday and Monday, but we continue to see a lot of volatility. Just today, in fact, as you'd mentioned in the last hour, Federal Reserve Open Market Committee meeting came back with their decision to raise short-term rates. So things like credit cards, auto loans, student loans, signature loans, those are all going to be affected short-term. By 0.75%. Up until last week, they'd been projecting they would raise 0.5%, but because of those hot inflation numbers that I just mentioned, they raised it 0.75%. We're going to wait to see how that plays out. Normally, we should see some improvement a little bit in mortgage rates compared to where we were last week, but it's all going to be how the market digests this. One of the things the Fed does do at each meeting is each of the Fed members that votes projects where they think rates should be by the end of the year, for example. And one of the things that changed in this report is that what they call the dot plot, which is what I'm just referring to, moved up by 1.5% as far as the target rate that they want to take the short-term rates to. And so certainly we are finally starting to see the Fed acknowledge that inflation is more serious than what they had been treating it as. We all see it when we go to the gas station, grocery store, or whatnot, and they're acting aggressively. Having said all that, actually just in the last 24 hours, the Atlanta Federal Reserve Bank adjusted their projection for second quarter economic growth, GDP, to basically being flatline. That on top of a negative reading for the first quarter of 2022. By definition, if we do in fact in the second quarter flatline or negative, that by definition is recession. And normally in a recession, we typically see mortgage rates start to move downwards. Not that they happen right away, but if we look back all the way to the 1960s, each time we've had two negative quarters of GDP, that has triggered by definition a recession, and interest rates have gone down. The only exception, and housing values, by the way, have always stayed stable or increased, Mark. The only exception being the 2006, 7, and 8 meltdown of the financial markets, and that was a totally different animal there. So there's reason to be optimistic that we might see the end of inflation as we get into 2023 if the Fed stays the course. But home prices are likely to stay very stable or rise at the same time that mortgage rates may drop going into next year. So Mark, this is a good time to buy. And even though the rates are above where we ideally would love them all to be, we'll redo that note in a year and get them into a nice, comfortable payment. So don't stop buying, folks. This is a great time to buy.
Yeah, because I mean, that's the conversation I've had with multiple buyers, and people just asking what the housing market's doing. Should they buy? Should they wait? Wait a year. What's going to happen? And just looking at just simple supply and demand again. We just still don't have the inventory. We're still short inventory, and those prices are just going to reflect that. And then your interest rates are going to be volatile, going up and down. But if you got a steady 3 to 4, 5% increase in your housing values, which we've seen 15 to 20% the last couple of years, inevitably that acceleration is going to, level out a little bit, but it's still going to go up. Like you said, if you can get something in now, and you're paying less for it. So,
yeah, if I might interject here, as well as far as property values go, just in the last week, there was a joint study done by Zillow and Pulsenomics of the top 100 to 150 economists in the country. And they're all projecting nationwide that over the next 5 years, we'll see 4.68% appreciation per year on average, which is about 26% over the next 5 years. So folks that are thinking they might wait for home prices to drop, the top economists in the country are saying, don't think that, because we're probably going to see home prices continue to rise by now.
Yeah. And like you said, it's like if you get a little bit higher interest rate, and if interest rates are going to potentially go down, obviously don't have a crystal ball, but if they do and you can refinance it, and you're going to be in that house a little longer, if you're used to maybe those little higher payments, maybe you have a 30-year now and you refinance to a 15-year, and cut that loan time in half, so that's something that just different ways to kind of play the game for all intents and purposes. Yeah, so I think that's kind of what we want to touch on today, but I appreciate everyone watching us. If you have any questions or anything else you want us to cover on the videos, feel free to give us a holler. Reach out to us on any of the social media platforms, or text either one of us, call us. My number is 402-672-7670. Russ is 290-8936. We're happy to help you, and just be a different set of eyes and ears for you, of what your game plan is, what your thoughts are, and just, give us we'll tell you what we're seeing in that regards, and just kind of give you a different perspective of it. Because, there's sometimes clients I've talked to, friends and family, that, hey, what do you think of this? Well, I never thought of it in that manner, and how you can use different things. And so that's what we're here to do, is just give you a different perspective and coach you and educate you, and get you on the right path to do what's best for you, and your family or your situation, or if you're getting into the real estate investment game, and all that kind of fun stuff. So here to help you. Give us a holler, and we'll see everybody again next week. And stay out of the heat. I guess and welcome all the College World Series fans that are coming in from out of town. And hope you enjoy your stay and enjoy the heat, right? So, but take care, everybody, and we will see you